Champions keep playing until they get it right. Billie Jean King. My friends, each and every day you play the game. 10 to 15 minutes, that is all we ask. Let's jump into these charts. We see stocks pulling back. Market's not quite yet closed. About another 40 minutes as I record the show today. We see the S&P 500 down 0.87%. And again, we've seen things slowing as we get up to the point we are right now. You can see on the 2-day chart, this is the first day of this latest 2-day candle. It'll finish drawing tomorrow. Right now, it's a red spinning top. We have down movement in the morning, a little further in the afternoon. We're above that weekly trend line. And again, just to make clear, we draw the trend line on the weekly chart. We re-observe it and where price is on the 2-day and the half-day, seeing if there's a penetration. We're getting close on the 2-day, and of course we see things moving down to it on the half-day chart too. We're still green on the volume and the candle on the weekly chart, and the weekly's our big chart for seeing the change in trend. And again, we want to get in at the right time. We want to get in early, not too early. We don't want to wait too late and miss the move, because once the move has taken place and you jump in, you don't many times have enough room for you to be able to clear what is necessary, and that is on the ATR, 1 ATR on the 2-day chart. That is the minimum of where we want things to move. That's also where we set our loss band. And again, there's all sorts of theories. You can do 2 ATRs, you can do 1 ATR, sell half, let the remainder ride until things turn. Any number of ways to do it. I encourage you to practice it. That's where we are on the S&P. What about the NASDAQ 100? Already penetrating the 2-day. That is, the 2-day chart is penetrating the weekly trend line. We can see on the half-day where we've had the wick on the bottom penetrated, but here we have the candle moving through. Now again, we can see where this is a weak week. We look at where our volume is. Again, it's got one more day to hit the average volume, but again, we'll be paying close attention as we finish this week and move into the next. Who knows, tomorrow could be a big down day or a big up day. If it's a big down day, it might go ahead and trigger something for us. Now, let's move on to bonds. Of course, bonds are red this week. We have, again, seen bonds moving down. This latest 2-day candle looks like a doji there. We can see the up move in the morning, not quite as much in the afternoon, up 0.76%. Are bonds going to shoot back up again, or is this just a short-term change and going to roll back over? Well, if the weekly has anything to say about it, and all things being equal, the markets tend to move in the direction of the largest chart, which is our weekly chart. You can see this here on the chart. Typically, it is doing that. So we will keep an eye and see if bonds are going to keep going that way. Right now, up 0.74% for the day. What about gold? Gold up a little bit for the day, about 0.5%, but again, a weak week so far. Volume's gone to red here, green spinning top, very little candle, little wicks. Sitting right there on that weekly trend line. We can see where the 2 days push through it, and just sitting below it on a doji, we can see where the half day is just right on the line. So we'll continue to keep our eye on things and see if gold has topped out in the short term, or if it's just gathering up a little energy to pop up again. But if you look back at gold, where do you see spinning tops? Again, at the beginning of a move where it's moved up, but we don't see spinning tops, do we? Anywhere in gold to continue moving up, do we? So again, we talk about reading charts, looking back, seeing what you see in them. And of course, spinning tops on gold going back over the last few months portend about every time, if not every time, into an up move, except at the very start when it goes from red spinning top to green. So again, keep an eye on that. Doesn't mean that's going to happen this time, but again, it's what you write about when you do your review. Each day when you look at the charts and then you write down in your trader's journal. Yes, you keep a trader's journal. You write down what your thoughts are. And then you can go back and highlight things that worked, like green spinning tops on gold seem to always mean a down move unless they come right at the beginning after it goes from red to green. Maybe that's true. Pay attention to that. Learn those kind of things. That's why we say you have to become personal with your stocks, your favorite stocks and ETFs that you look to trade every day. Let's look at Bitcoin pulling back 3.88%, the big downer for the day. You can see where Bitcoin is pushing through the weekly trend line on both the 2-day and the half-day. And look at the week we have here. I've used those words, W-E-A-K, W-E-E-K, several times, telling us what's happening. Folks, that's where we are. We always love to hear from you. Please don't hesitate to reach out to me, cw@chartingwealth.com. A plethora of great information at our website, chartingwealth.com. If you're not subscribed there at the website, you're not receiving our daily emails with the trainings that we put out, a special training for you each and every day, in addition to the daily review 4 times a week and the weekly review and forecast once a week. I do that on Fridays. I will be putting out up to 20 weekly vertical crossovers for our Patreon members today. And Patreon members, I've already posted at the Patreon site. I'll send you a link in today's email, but I already posted the 3-wave trades and the charting cryptos and commodities. It'll come out tomorrow for everyone, the charting cryptos and commodities. We always publish that to the general public and our subscribers. Our Patreon members get it earlier, but we send it out to the general public on Friday. Typically, Patreon members get it Tuesday or Wednesday. Thanks so much for being with us. God bless from the whole team at Charting Wealth World Headquarters.